Today we are here with Ryan Wilday, and Ryan is the host of the cryptocurrency trading premium service at Elliott Wave Trader. He is our Elliott Wave expert. Ryan has over 2 decades of experience trading equities, futures, and options. He was introduced to cryptocurrency in 2013 by a programmer friend and began mining and trading shortly thereafter. Though he read Prechter's Elliott Wave principle in the early 2000s, he didn't make practical use of the theory until joining Elliott Wave Trader in 2015. He has used the theory to call many of most important turns in Bitcoin and other cryptos since 2017. Ryan has developed many quantitative systems for trading. He's going to talk to us a little bit about that today for crypto, which he's deployed in the service to the benefit of subscribers. He's a popular speaker at financial forums and conferences throughout the US, including the Traders Expo, the Money Show, and the widely syndicated sites, including MarketWatch, Seeking Alpha, NASDAQ.com, and I think you've got a partnership with Seeking Alpha now. He's the author of 2 ebooks, The Risks and Reward of Cryptocurrencies and the 10 Rules to be a Successful Crypto Trader. You can find Ryan on ElliottWaveTrader.com or .net, ElliottWaveTrader.net, and I will put that link in the description of the video. I'm going to turn it over to you, Ryan, so you can tell us a little bit more about Elliott Wave Trader and what you do, and then we'll get into it.
Yeah, I mean, I was just say too, if you guys want to just check out my work, you can also find me on Twitter at rwilday. That's where you found me, right?
Yes.
Or at least we first started talking. I've a fun little series I've started on Sundays called Sunday Setups. So I tag it Sunday Setups, so you can actually use that. And I find a chart that I like. Actually, this last Monday I did Bitcoin, but I'll do altcoins too. I'm definitely focused on trading Bitcoin mostly, but I will pop in some altcoins as we go. Yeah, so I've been doing it for years. I think, and you know, on top of that, on top of Elliott Wave Trader, we've got Seeking Alpha. It's called Crypto Waves, basically a sister service. And we're after launching 2 months, my colleague and I, Jason, have brought it to top 10. I think we're at, or top 12, or at least below the top 15. So doing very well in that service. So with that, I'll just I'll jump into the market and then.
Yep. One of the things,
we'll
so ElliottWaveTrader.net. So a lot of people in the space know Lynn Alden. Lynn is one of the analysts with you in the firm. So a very serious, credible firm when it comes to cryptocurrencies.
Yeah, it's and I mean, Avi Gilbert, who founded the site, is also, I mean, amazing analyst on the S&P 500, and that's really how I ended up. I ended up as a member first, and you know, I was watching this guy Avi write on MarketWatch and going, how is he making these calls? So I joined as a member, and we teach all the members, whoever wants to learn the technique can learn the technique. And I you know, I had been aware of the theory, but didn't use it in trading so accurately. And by joining the site, I started the process of really learning from the crew. And then at some point, I started posting on crypto as a member. And then eventually, Avi asked me to start a service. Although I've traded for a long time, I was doing my normal work in tech and design. My last job was at Samsung Electronics. And so I was pulled out of that life to become trader full time as well as analyst full time. Because of, and it was during 2017 when cryptos were taking off. And so we've had the service through the bull market. We called the top. It was, at some point in time during, I think it was February 2018, I said, Bitcoin should rest or find support. I wasn't saying it would necessarily go there, but Bitcoin should find support in the 3,000 level. And so we know in December 2018, on my charts, it's like 3,125. So basically $125 over support, which is like, that's like an aircraft carrier, you know, jets coming down, finding a little landing spot. So, and so we've been, you know, riding this bull market. And so you know, what I want to share while we're here is basically the roadmap for the bull market and where we're at. So
awesome.
People have something.
I know everybody wants to hear it, and you're going to tell us exactly where we're going and when we're going to get there, right?
Yeah. Best I can. There's always adjustments, but yeah. So I'll share that screen, and then we can continue to talk through it. And then, yeah, no, we also apply a lot of quantitative signals to this that kind of assist as we go. Those are different things I've developed. Do you see this okay?
Yeah.
Cool. All right, and you know, for my subscribers, they know this chart was incredibly stable. I think the only time it's really been adjusted is there's some extensions we found in the middle of the third wave, and that's often Elliott Wave. I'll back up on the Elliott Wave theory, but that's often where we see extensions. The Elliott wave theory is basically suggests that the market moves in kind of roles of sentiment, and those waves of sentiment in human nature actually have a mathematical relationship one to the other. So a lot of people consider it voodoo magic. I mean, until they see it in action, it's really hard to believe this concept, but we do believe that the market has a mathematical structure. By no means do I want to treat it so much like a prediction methodology, because it does require adjustments at times. So it's not like, even though my count here, we call it the count, has been extremely stable for months on end now, with some extension back, I think it was early March, I indicated that we were extending. But since then, it's been completely stable. And I basically draw support areas where I expect the market to hold in blue, and then I have target areas in yellow. That's basically the way I indicate my subscribers, whether it's a micro or it's a long swing chart or it's a weekly chart, doesn't matter. I kind of use that nomenclature or those colors. And this blue box, which resides between 29 and 24K, was there before we got there. And I wasn't suggesting that it was a target, but I was suggesting that should the market come down, and I forget exactly where the levels of support I had previously, but it was like 47K. Should we break that level, then we open up the door to 29K to 24K. That's exactly what happened. So Elliott wave, you basically use the 5-wave pattern of Elliott wave theory. It's part of the structure that we see in all markets, that trends move in 5 waves. We use the relationships of those waves one to another to establish where support and resistance is. And it can be incredibly useful. I mean, I don't use it for all of my trading, but it's sort of the roadmap view, whether it be a roadmap for a swing trade on a smaller time frame, or it's a roadmap for navigating the entire bullish cycle. So to try to figure out where should we take profit? Well, we're going to be taking profit up in the yellow area, which is right now 88K to 114. If we were to break 24K here, if we were to turn back around, then I would have us in this larger 4th wave, which can drop down to 20. So it's basically just navigating based on those pivot levels that are formed by the mathematical relationships of the wave patterns. So,
and you sent me this chart earlier, so if it's okay with you, I'll put that into a Google Doc and share the link so people can look at this and follow along as you're discussing and describing all of the points. Is that
yep.
All right with you?
Yep, no worries.
Awesome.
So you see on this chart, actually, do you have a 4th and 5th for one more low? I think but on the website, I've said to subscribers, if we push over 41,400, we are not likely to see that last low. And so we're pushing up against that right now. And so on a smaller time frame, and I'll go to the other chart, smaller time frame. Let me see if I can. I guess I can't.
So our last low of 30 plus, 30,000 ish. So you're saying if we go over 41.4, we're not likely to revisit 30 ish.
Yeah, we're not likely. I mean, actually, to be honest, if we revisit 30K, we probably very likely dip to 24K, because 30K was a pivot. In Elliott wave theory, we would need a 5th wave. If we were to drop lower, that 5th wave should carry us down to 24K. So, but I see it as very likely right now based on today's action. I mean, even in, we do Elliott wave theory on a micro level. Even just this little cluster right under resistance says to me that we're building for a break of resistance right here. So you can see right here, 1, 2, 3, this is the 4th wave, and we should have a 5th wave. Generally, in just the orthodox view, we should have a 5th wave over that 42, and I can mark that up so everyone kind of sees it. The challenge with this, structurally speaking, is there's a wave down here that's also 5 waves. So we have what may be called an ABC. But I believe what's forming is basically a long leading diagonal, which is I won't go into leading diagonals, but it projects up in the 50K region. So this is just one of the legs of that leading diagonal. But we're very close. As long as we hold, I don't have the level offhand, sorry, but as long as we hold in this region, we should get a 5th wave push up to, it looks like around 42K. Might be as low as 41,700. And that would be effectively over resistance. We should get a pullback after that, but that should be the last pullback before we break over that level decisively.
Yeah. So as we speak, we're bouncing between that 39.5 and 41.3 is kind of where we're at. And at the moment, we're at 39.9. So it's kind of back and
Yeah.
forth between that range, not quite getting over 41.3 yet.
Not yet, yeah. But I
Yeah.
look at this. I look at the just the basic price action in micro, and I mean like looking at a 15-minute chart, and it looks like me it's pretty well given that we will. I might be
Mhm.
wrong, of course. If we break back below this 2 right here, actually I'll give you another. This is all based on fibs, and I'll give you a tighter level of support. If we break back below 36,082, then I think that's actually the first warning that we're heading back down to 24K. So I believe that 24K is off the map, but it's not a given yet. We're still fighting that resistance level, and you know, and not only once we break 41.4, we've got to get some serious movement from here on up to the 50s area.
Right.
But over 51,400, we're at least got the first sign that we're in the clear.
So you think we're off
I
to
mean,
the
I think
races there, or do you feel like maybe that could be a trap?
no, I know. I think once we're I think once we're in the 50s, we fill in basically a third wave off of this, and we'll have a higher level of support. So, but like I said, the reason 41.4 is so important, it's basically when we go back to the other chart. Let me find it again. When we go back to the other chart, it's basically resistance for this fourth wave I've got here. Let me see if I can get us in. So I have a little fourth wave right there.
Mm-hmm.
Okay. 41.4 is resistance for that. So it doesn't become a very valid fourth wave if we're over that from a Fibonacci perspective. And just getting to the mathematics of one wave to another, as I was saying earlier, that force really should be under 41.400. So that's where I assume we're breaking out. There are other patterns where we can fail from and whatnot, but we have a very complex correction. From an LEA perspective, we've got an A, we've got what's called a high B. The high B was a false breakout. You know, we had a little nominal new high, but it wasn't part of the impulse, the third top tier. And then we've got this big long C wave. That's a pretty full correction. And if we can't get that solid fifth wave, lower fifth wave, then I have to consider the fifth wave being one of the more minor waves that already completed. And that's basically where 41.400 came into play. So because again, it's too high. It's really too high for a valid fourth wave, at least reliably. It's a market surprise. I mean, we can sometimes be wrong, but it's a pretty reliable resistance level for a fourth wave.
Yeah, this is interesting. So primarily before 2016, 2017, this was retail driven, Bitcoin specifically. A few professionals, a few institutions, but not until really this past year to 18 months did we see a lot of institutional activity. Has that changed anything in charting Bitcoin since you've seen more institutional professional traders entering the game?
Well, I don't base anything off news or what's happening in terms of secondary information or externalities, as I say. I'm looking directly at price action. I mean, very pure in that regard. However, I will say just from looking at price action, as a lot of the heat, you know, again, I talked about the third wave extension in this area. This third wave is extended higher than normal already. So you could say that may have been led by institutions. I don't tend to actually worry about it. I can see their action in terms of they've been accumulating in this area. It's very clear if you look at all of the on-chain analytics. Some of the analysts that are out there that, again, it's not my area, but they're looking at it. I can see it in the tape. I can see the accumulation happening, tape meaning price action. So it's really clear. But where I think that we really changed, so to speak, again, I have a hard time attributing it to anything. It's just simply we have extension in this third wave. It's really higher than a normal third wave extension. And that's actually fairly common in crypto. Crypto have extended third waves all the time, not just on a big scale like this, but I see it in 5-minute charts sometimes. I mean, they just have a tendency once they go volatile to just, you know, overperform. And that's one thing that's important about Elliott wave is we're always trading for the third wave. Even when we're trading in this fifth wave here, we're looking for a third wave to form of this fifth up here. So it's fractal in nature. We were aggressive in this third wave. Well, another third wave, a little mini third wave will form. I say mini, but it'll get us like 20 grand in this minor fifth wave. So and that's where we see the extensions. I mean, in crypto, little altcoins, shit coins, if you like the term, they show that same behavior where they have this extension in the third wave. So
yeah, it's interesting. And that's kind of what I was getting at and meant by that question was the price action of the retail trader versus now with more institutional professional traders in the game. I was just curious if you've seen a difference in the price action, because I know that involvement is distinctly different in the last 18 months versus the prior 36 to 48.
yeah, I think what's different to me is sentiment. I mean, I think that the retail trader is always fatigued. They are very sensitive to FUD. I mean, right now they're very FUD being fear. What is it? Fear, loathing, or something like that. FUD
Fear,
is
uncertainty, and doubt. And I
yeah,
also call it fear, understanding, and doubt, because people are afraid of what they don't understand, right? So
yeah, there you go. I used to use it all the time. But anyway, when in 2018, retailers, like, they hung on to their crap coins all the way through 2018, and a lot of the old crypto traders, honestly, if they're not very good traders, they're basically financially debilitated unless they had a great job and were able to build up capital again. So I really, a lot of the 2017 crypto traders aren't even here. Just, some of the big ones, obviously, the people that survive, the people that have more skill. And so I think in some regards, it really is institutions that are driving participation. We also have, of course, active futures markets in the U.S. I trade the CME micro futures. I don't get involved in the big contract, but the 0.1 micro futures, I use that contract also in my brokerage accounts. So we have a very active, not just crypto on crypto exchanges, but we also have an active OTC trade with OTC firms that are pulling from the retail exchanges, but doing so with algos for their big clients. We have the paper hedging markets with the CME futures. So we have a really active market with not just the spot, but also the derivatives. And I think it's just making a more healthy market. The problem, again, is we see the same behavior in retailers where, I mean, I can't tell you how bearish people still seem in this market right now as it's forming a very beautiful bottom. Whether that bottom is in already or we take one more low, I see so much bearishness. We were talking about options earlier. I mean, the skew and the put side of the options open interest is bearish.
There's still a lot of shorts
out
there. I think everybody's looking for a trap, but it's really interesting. I see a lot more bullish people and overly bullish a lot of times than I do bearish. It's really interesting, but I guess it depends on where you're getting that from. And even on the institutional level, between the banks, Goldman and JP Morgan, and on any given day, they might be bullish, they might be bearish. And it's really interesting and fascinating to see the human behavior and psychology of the markets and how it's playing out.
Yeah.
And some of that stuff is FUD driven, because obviously markets are manipulated. They always have been, and they manipulate it with news, with sentiment. They manipulate it with price action, things like that. So it's been a very interesting last month, and more particularly the last 3 months, and to look at where we've come from in the last year to where we are now, and what's going on. And like you said, we could very well just be putting in a bottom here and moving onward and upward from here. And nobody really knows. That's the thing. Everybody's looking for a trap, and then there's the other side of the coin where everybody's looking for 200K by the end of the year.
Yeah, I get an interesting view as a basically a trade service, because I may hang, I'm on sometimes late on the boards, but if I hang up and I go spend time with my family, and I wake up in the morning, whoever members were posting overnight is often a pretty good window into sentiment. And so, I mean, honestly, like when we were about 3,000 lower from here, I would wake up in the morning, check out who's been posting all night, and I just saw FUD and FUD from my members, my paying subscribers. And I can be as bullish as I want, and they may or may not believe me. Long term, they tend to follow me. I mean, some of these people have been with me for 4 years now, for when we first started back in August 2017. There's some of those people know a little bit better, but some of the new folks that haven't seen a lot of the wave counts pan out, work out, they might be posting FUD online, and some of them are, while others are accumulating. And I saw a lot of negative posts over last couple of weeks, and now my subscribers are waking up. It's a little different, because when they start to see my milestones start getting hit, well, then they kind of wake up to bullishness. Like right now we're beating up against 41,400. Well, the board wasn't very bearish today, because we are we have a market that's trying to overcome a key level. So, you know, it comes and it goes, but I honestly, from my subscribers base, I saw a ton of kind of unneeded FUD. You know, I don't want to make fun of any particulars, but I certainly saw a lot of bears.
So are these professionals mostly or individuals?
They're all over the map, to be honest, and most of the people that probably actively post are retailers. But I do have, you know, what happens is the professionals often are more discreet. So I've been to our members dinners and a hedge fund guy comes up to me and says, "Hey, I'm following you on Bitcoin." You know, or I once got a DM on the site that was from a crypto CEO. He had one of the big projects. Actually, is a member of my site, but so those guys tend to be very discreet. They don't necessarily tell me who they are, or they certainly don't post to all the members. But a lot of the active posters are either retailers interested in crypto trading, but some of them actually have through my service turned the corner from doing a workaday job to trading for a living. So we have people in transition as well. So it
That's
runs the
awesome.
gamut. Yeah, it really
Yeah, I
runs the
think it's
gamut.
50-50 right now. And if you look at the shorts, you know, the longs and the shorts, you'll see probably about that breakdown when you look at the charts of the puts and the calls. And
Yeah,
so whoever's watching, for everybody that's watching, we have people watching from all over the world. It's really cool
that's
where,
cool.
you know, how it's distributed. So for everybody watching, post in the comments whether you are bullish or bearish, and we'll do our own little
Yeah,
poll. I know this video will probably get about 10,000 views. So it'll be interesting to see how that breaks down. But what I've seen most of the polls lately is that it's 60-40 depending on the movement of the market. So if it's down,
yeah,
60% bear, if it's up, 60%
yeah,
bull. So it's really interesting how
yeah,
that um, affects sentiment at the highest levels, professionals or
yeah,
retail.
yeah.
So could
I
you
mean,
take us through
another
the,
date.
go ahead.
As I say, another data set is the BitMEX. I didn't look at it
Mhm.
recently, but another analyst said the BitMEX funding rate on futures has been upside down, meaning shorts are paying longs, and that's a sign that doesn't happen very often, and that's a strong sign that the market is overly bearish. So
Yeah,
there's
it's
a
very
lot of
weird. And the market's oversold. So it's kind of it just doesn't make any sense.
yeah, yeah.
So take us through the points real quick, and then maybe we'll talk about your quantitative analysis.
Yeah. Sorry. So it's sorry. Take you through the points here, or you want to go
Yeah,
more
just in
micro?
general, how you've got it all laid out, going back to you've got the
Okay.
March, you know, sell off, and then all the way through what these points represent. I don't know anything about Elliott Wave, and some of the people watching may not know. So if you could start us back in
Yeah.
March, and we'll go from there.
So if we let me see if I can zoom out now. Yeah. So I mean, again, the start of this wave one was 2018 low. So December 2018 was like 3125, at least on this This is a BitMEX chart. Sorry, this is a
Okay.
global average chart. So it was in that zone, and so we had the 2019 rally into this 13,400. In fact, and I'm going to brag a little bit, but on Seeking Alpha, I wrote an article that I'm looking for a top at like 13,400, and I think we stretched to like maybe 13,900. So it was a pretty good call. Then we had a long, I mean, nine month wave two, and then really a slow build into this third wave. And again, third wave is where we extend. So my view, as long as we hold over 24K, is that we still need the fifth wave of this third. The only fly in the ointment to that point of view is that Ether has jumped degrees. So Ether is basically in this fourth wave already, confirmed. So it's a little bit different. And it may be that because Bitcoin often has shallow fourth waves, that it doesn't need to break 24 to be in this wave. But this is my primary view, that we still need to get a wave up to 88K is the sort of lower end of the region. Higher end could be 114K. It's a big region, but that just speaks to how in log the fibs kind of open up in these big long-term charts. So how do I deal with a range like that of 88K to 114? Well, the micro will start to tighten up that range. By the way, it basically it'll put in its fractals, and then I'll be able to tighten up that range in terms of expectation between 88 and 114, but it's too early to do that now. So that would be the top of the third wave. If you look on this chart with the 1-2 being 9 months, it's quite often that the fourth wave that is in the same degree, which you can see it by the number, the number type. This fourth is the same degree as this wave two. That fourth wave is also often as long as the wave two. So don't be surprised by a 9-month wave four, or maybe just a 6-month wave four. It could even stretch to a year, where we're literally going sideways It can go sideways within a big range. So we can see a big up and down, depending on how the wave 4 forms, between the top of this, in the say 88 region, 88K region down to this fourth, which would be depending on where the channel. I'm using a channel as a first support level, so it could drop down as low as 20. Might actually hold above 30 because we've dropped there. But I believe it'll stretch in time. I think it'll wear people out. Wave 4s often wear people out. Wave 2s often scare people and make them think that they're going lower than the beginning of the bull market. So when we had this wave 2 in March, people thought we would be dropping to 1,000. I even thought it was possible until we started going reverse the other way. It was possible that was going to break down, but it held. And so that's the job of the wave 2, we say. The job of the wave 4 is to wear people out. So we'll see that in terms of sentiment quality. It'll be very different from the wave 2. And then eventually we'll have this wave 5, which in my point of view should be at least 150K. It may reach up into 200K. It depends on how it develops. But I would expect after that 5 wave, we have an extended bear market and much longer than the one in 2018, just larger degree. And I don't have a weekly chart here in this computer, but it would be a multi-year bear market potentially. I don't think anybody is calling.
Where do you anticipate wave 4 and 5 time frame?
In Elliott wave, timeframes are difficult. So I'm just using channels to try to estimate. I expect right now us to see wave 5 in the latter part of 2022. So we'll start a bear market sometime late next year.
Mm-hmm.
But we've got we've got a huge amount of trading to do. I mean, especially if we can get a low fourth in like the 30K. We've got a 5x run just in Bitcoin coming in 2022. By my expectation, and you can imagine what altcoins are doing during that time. So we'll get some crazy altcoins. I'm not a big fan of altcoins, but I do buy little bits to kind of juice up my Bitcoin holdings with them. Trade them out into Bitcoin.
And see, I think that's where a lot of people get frustrated and confused is with cryptocurrencies, big moves happen fast a lot of times. And I think a lot of people, especially given the last year, how far we've come so fast, are expecting to get back there and beyond very quickly. Whereas this could very well take, like you said, a good year to 18 months to reach that peak before we start heading down again.
Yeah. And time slows down after the third wave. Like we've basically either are finishing or have finished the third wave. Time slows down after that. Gains are harder to get. The market gets more choppy. So the fourth and fifth and Elliott wave is a lot harder to trade than third wave. But the paradox is so many people miss the third waves. So like the big focus of Elliott wave trading is to catch the third wave. The wave 2 tends to shake everyone out. They think the bear market's back. They don't get on board the third wave. And then, in fact, I even struggled with it after this too. It was probably the only wave 2 I've seen in a long time I struggled with, just because it was unorthodox bottom. I mean, it really almost needed another wave on the bottom. So I caught this wave a little bit late, but we've ridden it up since. And that's where, once the third wave is complete, it gets harder. It definitely gets harder. So hopefully people can hang in there during this fourth wave.
I think you have
the fourths and the fifths.
You have the group that they're just holding, they're long-term, they're never going to sell. I talked to a friend of mine the other day. He looks at it as insurance. And he said, I bought it. It's insurance. I'm never going to touch it until I cash my insurance policy. And so he's looking at it as a premium. And I asked him, I said, well, what if it's worth $5,000 when you go to cash it in? He said, well, it's insurance. It is what it is. So he's not really worried about it, which is an interesting perspective. The other side of the coin is you have your traders that are in and out. And like you said, huge range to really cash in if you know what you're doing and make a lot of money with the movement in the area that we're in now. I mean, that's 30 to 40,000. That's huge liquidity zone. And then you have your institutional investors, where I think a lot of people, like somebody asked the question the other day, said, why would an institutional investor want to buy high to drive the price low? And when you think about the time frame, if they have a 2-year horizon, well, they can invest as much as they need to reach that 5x return a year or 2 years from now.
Yeah. Well, institutions have a different game that's open to them, and retailers can use it too, but it's not necessarily used that much. I use it a little, but institutions can hold their crypto, their Bitcoin in a cold wallet in custody, and then take a loan on those assets and use that loan to fund hedging with paper futures. And that's quite often, I mean, because an institution moving big crypto out of cold wallets, that's kind of dangerous security wise. So those guys will take loans on that asset and hedge it with futures when they feel they need to. So
and that's what's fooling a lot of people, because there's a narrative out there that the Bitcoin that are taken off and put in cold storage are long-term hodlers that aren't trading, and
yeah,
or that will never sell, and that's just not what's happening.
Yeah, not necessarily anyway. Yep.
Yeah, it's interesting how that works, and when you're looking at all the different avenues and technicals, are there any other indicators you use, or are you just strictly Elliott Wave and that's the only system you use?
I have a huge respect for the on-chain analytics. I mean, Willy Woo is one of those. To a certain degree, Lynn. I mean, Lynn is maybe not a on-chain expert, but she uses that in her work. So I certainly read Lynn's articles when she posts them on her site. I respect those guys. Like I have such a trader's muscle. Like I'm so used to what I've been doing for so many years now, and I do adapt. I mean, like quantitative signals was a very recent adaptation, but I'm just used to my game plan, and so I like watching what they do. I do like when I see a support level, the market came down to it, and I like when they say, hey, we got institutional accumulation in this area, there's more Bitcoin coming off exchanges. That's reassuring to me when I'm taking this gutsy. I was accumulating in this blue box, so it certainly is comforting that I got something going on. But no, I mean, in the end of the day, I'm just a price action guy. Like if I had if I was put on a desert island and I didn't have any of my on-chain analytics folks posting, I would be okay. I'd be fine. I'm just used to it. Yeah.
So are you day trading, or what is your strategy?
I actually do everything. I have a certain, it's almost like a bell curve. I've got I got, if you imagine a bell curve, one end, I got my HODL position, and most of that money is either in a cold wallet or is in some of these interest bearing accounts like Nexo and BlockFi. And I use everything, and in terms of accounts. And then I've got kind of, I call swing position. And these are making these big moves. I'm trying to catch as much of this big move as possible. And then I have scalping money. So like, I'll literally take like a 1 hour trade on Bitcoin. In the swing trade part, I would throw in some alts, because I find some good alt setups, and I will swing trade them, but I don't scalp them. I'll do quick little scalps in Bitcoin. Today I did a quick little scalp. Like literally, I think I don't have my chart up, but I think it was literally, I scalped like maybe $100 in Bitcoin micro futures on the Chicago Mercantile. Just a quick little trade, and it was a good one. I mean, quick little short today. So I'll do those things too as well. So I'm kind of all over the place, but I do think it's important for most people to have some kind of HODL, or at least multi-week swing if they're trying to move in and out all the time. I blow it too. I mean, I blow it too in short-term trading at times. And I check my performance, and if I'm blowing it too much, I'll stop for a while. So it's really important as a trader that you kind of measure yourself, and then adjust, or take a break, stand back if those quick trades are not going very well. So I'll have to at times. It happens.
Do you keep a journal and document your rules for your own rules and principles you developed over the years?
I do a little bit of that. I've got quantitative signals for scalping mostly. So if I've got so if I have a quantitative signal that say is profitable 50-60% of the time, and that sounds low, but honestly, the way a lot of the trades are, for every 1 unit you lose, it's 3 units you gain, right? So a 50% to 60% win rate is very good. So if I'm running like a week, if I'm running a day where I took like 3 scalps and I lose 3 out of 3, I'm done for the day. Like it doesn't work anymore. You're standing on the bad end of statistics when that happens. So I'll take a step back, and then I'll ask myself, any of those trades did I veer from the system? Did I front run the signal? Anything like that? So I will be harsh on myself. And you do it long term. You get used to doing that. At the same time, what I'm risking on scalping is nothing compared to my crypto worth. My scalping is a small portion of what I'm doing with my accounts. So if I was to blow it, What's that?
Keeps the lights on and pays for the software.
Yeah, yeah. I mean, and it pays a little extra bills if it's successful, and if not, it's not too painful. So, I've regulated myself really well, and I've traded on leverage and used futures and all that stuff, but never risking really more than I can handle. Way, way, way far away from that.
Yeah.
So.
Awesome. Well, let's wrap it up here and summarize it. I know you're busy. I appreciate you taking some time out today to
Sure.
share. And like I told everybody, I'm going to post this link for the chart so you can download it, and make sure you put in the comments whether you are bull or bear, so we can take a little poll here. And so let's summarize real quick where we are now in wave 3, what we're looking at in terms of values and timeframes, and then we know the 200s by the end of 2022 is where we're headed, and possibly a long-term bear market after that.
So, I mean, again, the question is, do we hold here at that 30K drop? My take on current action is that it's likely. Should we break down below, I think we had it at 35 or 36, we break down below that, we will take another trip down to 24K. But again, not my expectation today. That may change. The target for this third wave to finish it up is 88K to 114. Then brace yourself, because we should get this long wave 4 into the latter part of the year in early 2022. There will be some good trades within it, but it's going to be a shake fest on a macro level. So it's going to be very difficult for a lot of people. At least that's my take right now. It may change, but again, wave 4s are meant to exhaust people. I mean, we even saw a little bit of exhaustion in this little wave 4 that we just got through, or likely just got through. And then, after this bigger wave 4, again, maybe as low as 20K, may be 20K to 30K. It often holds the previous wave 4. So if we hold 30K here, that may be all we see in this wave 4 coming up.
Potentially
And
the
then,
end of this year going into early 2022.
Yeah, exactly. So from, it could be, I've got it on January, but honestly, it may be a little bit longer into early 2022. And once that bottoms, we should take off to, again, 150 is the minimum. It can reach 200K. I think some of the on-chain analysts like Willie, we were looking for 200K. So maybe that works together. I don't know. But yeah, and then brace yourself for a bigger bear market.
Awesome. Well, Ryan, I appreciate you taking time out today and sharing your wisdom and your experience with us. You've been very gracious, and we would love to have you back again here in a few weeks and see where we're at.
Sure thing. Thank you.